welcome to everyone wherever you're joining us from across the world. Thank you for tuning in to this live event hosted by the World Bank's Multilateral Investment Guarantee Agency, MIGA. I'm Esther Awuni, business anchor at CNBC Africa and your MC and moderator for today. Thank you for joining us. Today, we'll be unpacking the theme, Driving Foreign Direct Investment to Africa, the first in an annual series. We'll showcase investment opportunities in Africa and share new thinking and discussions on FDI among a cross-section of experts, including investors, policymakers, and economists. Once again, I welcome you all. Now, to help us kick things off, please welcome Mr. Hiroshi Matano, Executive Vice President, MIGA, with some opening remarks. Over to you, Hiroshi.
Thank you, Esther. I'm pleased to be kicking off what I hope will be the first in annual event series on FDI. While we always look to innovate and introduce new product lines, such as credit enhancement and support for trade finance, FDI lies at the heart of what we do. We're the agency within the World Bank Group mandated explicitly with bringing in FDI to developing countries. And indeed, we rose to the challenge in fiscal year 21 by issuing $5.2 billion in insurance coverage for projects across the world. We focused in Africa this year because it had been hit particularly severely as a result of COVID. Assuming safe travel is practical, MIGA management and staff look forward to meeting with investors and policymakers to further discuss the pressing issues. With that, let me invite President Malpass to say a few words.
I'm very pleased to welcome you all today to discuss a topic that is a critical part of driving sustainable economic recovery in Africa. That is mobilizing private investment and FDI into the region. MIGA was established 33 years ago because the World Bank governors at the time realized that concerted action was needed to increase capital flows to developing countries without unduly increasing their indebtedness. Though that was a different era, we find ourselves faced with new compounding challenges: reversals in development, rising debt, a fragile global economy, and the climate crisis. These challenging times, however, also offer us a profound opportunity. For Africa, FDI can help drive economic recovery, create jobs, generate taxes, open up participation in global value chains, and be a conduit for knowledge sharing. It has a great potential to bring much needed investments in climate infrastructure and resiliency to Africa. I hope we can collectively chart a concrete path of channeling investment into the most impactful projects that deliver returns on human capital, broad-based growth, and sustainability. Wishing you all a very fruitful discussion. Thanks.
Well, joining me now to give us a better picture of the state of and trends in FDI flows in developing countries and an outlook for the African continent is Mr. James Zen, Senior Director of Investment and Enterprise at the United Nations Conference on Trade and Development, UNCTAD. Well, thank you so much, James, for taking the time out to join us today. Let's just dive right in. What is the current state of FDI in Africa?
Thank you, Esther. I think for the current state, I would say that FDI in Africa was hit hard, but more resilient with a quick rebound. FDI in Africa was hit hard by the triple shocks caused by the pandemic, supply, demand, and policy, but the decline in inflows was much less than the world average. In 2020, FDI to Africa declined by 16% to $40 billion. Most countries and regions within the continent was affected. FDI inflows to North Africa contracted by 25% to $10 billion, with major declines in most countries. FDI inflows to Sub-Saharan Africa decreased by 12% to $30 billion, with large declines in Ghana and South Africa. But nevertheless, FDI flows to Africa demonstrated more resilient compared with the rest of the world. But for the current state, I'm talking about the first half of this year, FDI flows to Africa rebounded with 16% increase, reaching an estimated $23 billion. For sub-Saharan Africa, it saw 22% rise, with FDI reaching an estimated $18 billion, and flows rose strongly in Nigeria, Mozambique, Ethiopia, and South Africa. FDI remained flat in north of Africa, while flows to Egypt registered a very minor decline. They rose in Morocco and Tunisia. So please note that the relatively positive picture masks the divergence in sectors, types of investment, and the geographical distribution. Sector-wise, the natural resources sector was hit hard in 2020, but had rapid recovery in the first half of this year. And the new investment growth sectors was disrupted in 2020, but growing, including logistics, financial services, consumer services, and renewable energies. What is worrisome is the SDG, Sustainable Development Goal sectors, as was seriously impacted, and it will take longer time to recover. So this includes transportation, water and sanitary, food and agriculture, health and education. So the immediate challenge is to minimize the number of lost years in terms of progress made towards SDG goals. So the main concern in Africa is that the pandemic could wipe out the development gains achieved over the last decade.
Hopefully that won't be the case. But what do you observe in terms of FDI flows to more vulnerable countries or those affected by fragility and conflict?
For these vulnerable economies and low incomes, I would say it's noteworthy that FDI inflows to the 33 African least developed countries increased by 7% to $14 billion in the mid of the pandemic. As a result, that African LDCs performed better than Africa as a whole. As I mentioned, that for FDI flows in Africa as a whole declined by 16%. So the inflows exceeds 1 billion in 5 African least developed countries and 500 million in another 5.
What is your outlook for FDI for the continent?
Short-term prospects, I would see a rapid rebound, but the full recovery takes a longer time with uncertainty. So FDI in Africa expected to increase in 2021. That's what we are witnessing. But a full FDI recovery will take place towards perhaps the second half of 2022. Amid the slow rollout of vaccines and the emergence of the new COVID strains, such as Delta and Omicron, a significant downside risk persists for FDI in Africa, and the prospects for an immediate full recovery are uncertain. Specifically, we see that similar to the global level, growing investor confidence in Africa is mostly in infrastructure, boosted by favorable long-term financing conditions, recovery stimulus packages, and development assistance related investment programs, and international project finance deals, in fact, are up significantly in value. And we also see that it's largely large deals in some power sectors. Now, in contrast, investors' confidence in Africa in industry and global value chain remains uncertain. Greenfield investment projects announcement continued their downward path. That's about 30% in value and 25% in number of greenfield projects for the first 3 quarters of this year. So that's the kind of indicator for the immediate future of FDI flows to Africa. The recovery of investment flows to sustainable development goal related sectors in Africa, which suffered significantly during the pandemic with almost a double-digit declines across all SDG sectors, and they will remain fragile. The combined number of announced greenfield investment and projects finance deals fell by 32% in this SDG sectors, that's education, water, sanitary, and what I mentioned earlier. Longer term prospects in Africa for FDI, I would say positive with great potential. So new opportunities due to global value chain restructuring, which is going to happen, intensified business-related international assistance in Africa by major countries, the approval of the key mega projects, the African Continental Free Trade Area Agreement, and its forthcoming Sustainable Investment Protocol could lead to investment picking up greater momentum beyond 2022. So Africa is projected to grow by 4.6% in 2021 and average 4% up to 2025. All this will attract investment in the years to come.
Well, fingers crossed on that. Thank you so much, Zan, for talking to us today.
Good morning, good afternoon to everyone joining today. I would like to take you through a quick tour of MIGA in Africa and the role we play in driving foreign direct investment into the region. First, a quick overview of what MIGA does. MIGA's investment guarantees can support a variety of projects, ranging from pure private sector all the way to public sector projects procured by governments. We offer political risk insurance products to protect against transfer restriction and currency inconvertibility, expropriation, war and civil disturbance, and breach of contract risks. We also offer a credit enhancement product that protects against defaults of loans to eligible host governments. MIGA has been supporting investments in Africa since its inception over 30 years ago. Currently, Africa is the region with the largest outstanding gross exposure, representing nearly 30% of our total portfolio exposure. That's $6.5 billion in guarantees across 99 projects in 30 member countries across Africa. MIGA's impact has been significant. 11 million tons of CO2 equivalent avoided per year, 19,000 gigawatts of power generation, and 40,000 people employed. Now travel with me across the continent and take a closer look at some of our projects where MIGA has worked with investors to uncover the investment opportunity. Our first stop will be the Kasada Hospitality Project. This project spans 10 countries across Africa. Kasada, a hospitality-focused private equity fund, approached MIGA as it was considering building its portfolio of up to $1 billion into the hospitality industry across Africa. MIGA is providing total coverage of up to $271 million to Kasada and its subsidiaries. The first set of projects to be covered, a portfolio of 8 brownfield hotels acquired by Kasada and operated by Accor in Cameroon, Côte d'Ivoire, and Senegal. A trend we've been witnessing is a gravitation towards brownfield acquisitions versus greenfield projects in the post-COVID recovery. Greenfield project announcements, which reflect investor sentiment and future FDI trends, dropped by 62%, from $77 billion in 2019 to $29 billion in 2020. Greenfield investments are particularly difficult in the hospitality sector, where existing capacity remains above demand. For MIGA, the Kasada project was a great opportunity to support a brownfield investment that would preserve existing jobs and create new jobs directly and indirectly right away. As part of its $1 billion portfolio, Kasada will pursue 70% brownfield acquisitions and 30% greenfield developments. Kasada will prioritize projects that have started construction but have not been completed due to a lack of capital and/or other economic pressures. Now let's move to Burkina Faso to discuss some solar projects MIGA is supporting. Burkina Faso has one of the lowest electrification rates in the sub-Saharan African region, 20% as compared to 48% for the region overall. The country is striving to address its energy access challenges and enhance its energy security. To advance energy access in the country, MIGA recently issued over $5 million to French investor GreenYellow that will cover its investments into a 30-megawatt solar PV energy facility in Nagriongo. What makes this project unique? The plants are anticipated to be part of the first round of solar IPPs in Burkina Faso and will bring much-needed clean and affordable power to the country. Our next stops are in Central Africa, where MIGA has partnered with an innovative off-grid energy access company called Bbox. Bbox is a next-generation utility that offers off-grid energy solutions, including solar home systems, alongside equipment like lights, televisions, and refrigerators. Bbox is also using energy as an access point to other services, such as LPG cylinders and small gas burners for clean cooking. Last year, MIGA issued guarantees of up to $37 million to a fund managed by African Infrastructure's investment managers, and almost $6 million in guarantees to the Facility for Energy Inclusion's Off-Grid Energy Access Fund for their investments into Bbox. We saw a unique opportunity to drive investments into the company's innovative business model, leveraging pay-as-you-go mobile money payments and their off-grid solutions. For our last destination, let's zoom out to two Pan-African financial sector projects. In 2020, MIGA supported two African banking groups, ABSA and First Rand, to boost lending in the region and increase bank resiliency amid the COVID-19 pandemic. For ABSA Group, MIGA issued almost $500 million in guarantees to help expand financing across 7 countries. Freed up capital would be focused on financing corporates and SMEs, as well as on projects with potential climate code benefits. In addition, as part of the COVID-19 response program, MIGA issued guarantees to First Rand to support its subsidiaries. The guarantees free up capital, which allows the subsidiaries to continue their operations and weather the pressures arising from the pandemic. Both ABSA and First Rand projects are examples of MIGA projects where financial institutions have tapped into MIGA's capital optimization product to help boost lending during the COVID-19 pandemic. Now, this is where our journey ends today. And as you can see, from all corners across Africa, MIGA has been a valuable and trusted partner for investors who want to invest in impactful projects. MIGA products not only deliver more security to investors, but they also can help reboost foreign direct investment in a post-COVID future. Thank you and have a great day.
Moving on now to our panel discussion for this event. Joining me for a conversation on driving FDI to Africa is Mr. Amadou Hott, the Honorable Minister of Economy, Planning and Cooperation, Senegal. Also joining us today is Cheryl Boss, CEO at ABSA International, David Damiba, Managing Partner and Chief Investment Officer, Casada Capital Management, also joins us today. Please welcome also Ethiopi's Tafara, Vice President and Chief Risk, Legal and Administrative Officer at MIGA. And last but not the least, Dermot Gill, Vice President for Equitable Growth, Finance and Institutions at the World Bank. Thank you all for joining us, taking the time out to join us today. So, Honorable Minister Hott, could you first tell us how COVID-19 affected FDI flows to Senegal and how the country has handled the challenge?
As we all know, the COVID has affected FDIs in Africa, but in Senegal, we managed actually to increase FDIs thanks to the energy sector, in particular the investments in oil and gas. We have major oil and gas project going on right now with expected first oil production and gas production in 23. We saw really no investments on the tourism sector, no investments virtually on all sectors, no FDIs basically, but the government continued to invest during this period. We're seeing things picking up again, and we've taken some measures actually to make sure that we are attracting more FDIs in the short to medium terms.
All right, thank you, Honorable Minister. Now let's bring in the perspective of the private sector and investors. I would like to ask both Cheryl and David how your firms have navigated the pandemic within the continent and how has the current situation changed your approach?
ABSA operating in the 12 markets that we do across Africa was, had to look and say, what is our plan going through the COVID crisis and through the pandemic? And we really took two approaches, which was protecting lives and protecting livelihoods. And so what we sought to do initially was to say, what is the medical support? How do we get involved medically in terms of PPE, in terms of really availing the countries in which we have a presence of support. And then most importantly, and the role as we play in a bank, and recognizing the importance of the social impact role that we play on the continent, was around protecting livelihoods. So really getting involved in terms of looking at giving support into the ecosystem, looking at giving debt relief on loans. We gave in excess of $500 million of relief to clients, and so really played a role. And I think that, going forward, we see significant opportunity.
Well, great. David, you're up next.
We are focused on private equity real estate with a focus on hotels in Africa, hospitality. The platform was launched in 2019, so you can only imagine that a year like 2020, which is an historic year in terms of stress test in the sector, we adjusted the strategy a little bit by focusing a bit less on greenfield investments and more so on acquiring hotels that are already existing, what we call brownfield investments. And it went from basically a shift in terms of investing to creating jobs to actually job preservation as far as Kasada was concerned.
Fantastic, David. Dermot, let me bring you in here. From a bigger picture perspective, what is your assessment of what countries need to do to further drive investor interest?
Just as all African countries are not the same, all foreign direct investment, whether it's to Africa or to other parts of the world, is not the same, right? And one can think of FDI as consisting of three types. The first type is resource-seeking FDI. So these are investments that are for accessing Africa's natural resources, like minerals and metals, and Africa gets a lot of these investments because it has a lot of natural resources. The second is market-seeking FDI. And these are investments to access Africa's growing markets for goods and services. Now, Africa doesn't get a lot of these, because its markets are neither big nor terribly well integrated. But they're getting bigger and they're getting more integrated, so these investments ought to grow. The third is what we call efficiency-seeking FDI, and this is the holy grail of FDI in a sense, because these are investments to access opportunities for cutting production costs by locating production in Africa. And these bring, three things. It brings patient finance, it brings good jobs, and it brings socioeconomic progress. It requires good institutions, good infrastructure, but it also requires well-targeted interventions.
Very well said, Dermot. Ethiopius, let me bring you in here. Now, MIGA's role is to drive FDI to developing countries. What is your reflection on how things have gone over the past one and a half years?
The COVID-19 pandemic has led to rising debt burdens as governments try to combat the economic impacts, mostly through prolonged lockdowns that disrupted normal economic activity. And in Africa in particular, we've also seen a dramatic decrease in trade finance available to businesses and governments. Despite the impact of COVID, we've had some interesting and innovative projects over the course of 18 months, including our first support to an off-grid power project, our first support to commercial and industrial users of telecoms, our first solar IPP in Burkina Faso, our first geothermal IPP in Ethiopia, the first IPP project for roads in Kenya, and first support for a continent-wide hotel asset acquisition platform. And you heard from David on this.
Now, circling back to Minister Hutt, let's talk about solutions. What is Senegal doing now to keep FDI flow into the country?
On the reform side, we've been focused on several areas. Number one is the Compact with Africa reform with the German government, with the G20 initiative, focusing on four key areas to attract more FDIs, to facilitate the business environment. Number one, it is to focus on access to land for SMEs, access to finance, but also reforming the labor laws and the labor administration process as well, so that it's more friendly. And lastly, focusing also on human capital, basically on vocational training. We also decided to create a project preparation facility so we can prepare projects for the private sector. And I'm sure some of those PPP projects will need at the right time MIGA guarantees, because sometimes we have undertakings of the government vis-a-vis the private sector. And if MIGA can cover and strengthen those undertakings, that will facilitate the investment of the private sector.
David, let me bring you in here. What is your prognosis of FDI trends in the region going forward, and what kinds of opportunities are you looking into?
I think we're pretty big believers that FDIs will, some of the countries that have had a dip on it will rebound in the next few years. I think if you look at GDP growth in Africa and what happened in 2020 and the rebound that we're seeing in some of these economies, Africa at the end of the day ends up being quite a bit of a resilient economy in general and quite diversified in its different makeup. So we're long-term believers in that. The only thing that we change is, as the cycles advance and change, we just adjust the way we invest, as I mentioned earlier. It's great to also have the minister on the panel. Is we also want to oftentimes work with government effectively, because we're one of the few investors who in the middle of this crisis are going into countries trying to invest, support jobs and create jobs, right? So the more we have discussions with government, the more we can see good ways to work together, create value. We have MIGA as also guarantors in some from providing insurance products. We have the IFC funding us as well on the senior debt. So we're bringing together all the different support groups that can happen, but the government is extremely important in terms of attracting private investors who can come in and do that.
Cheryl, let me bring you in here. Are you just as optimistic as David?
Yes, I believe we are. So really, I think what we're seeing is that economic growth, development and success are really linked to infrastructural development, and that'll result in positive return for investors. But I think also key to the success is the link up and the partnerships that we see come about in public-private partnerships. These are key critical, and I don't believe that there's one institution or one government that will be able to do it themselves. And so it really will be about a collaborative effort between commercial banks, between public sector, between private sector, and of course, importantly, with development financial institutions.
Well, thank you so much for that, Cheryl. Ethiopians, let me circle back to you. Now, world leaders are talking about economic recovery that is intertwined with a sustainable climate-focused recovery. Now, how do MIGA products encourage foreign investors to invest in climate-related projects in Africa?
Guarantees are becoming the instrument of choice for many in the private sector looking to invest in climate projects in Africa. And as a result, we at MIGA have been able to catalyze private sector finance for climate projects, and we've delivered over 1.6 billion in guarantees in support of climate finance transactions in sub-Saharan Africa since we started tracking climate transactions in our fiscal year 16. Now, we're focusing our support to enhance the climate resilience of our projects, and this is particularly important given the region's vulnerability to climate change. And we're now marrying our expertise in financial structuring and management of ESG and other risks that help mitigate the perception of risk in investing in Africa with our expertise in climate mitigation and adaptation. And this creates new opportunities for climate business.
So, Indemit, let me just ask you this last question. Now, what other policies can governments adapt that would further help catalyze FDI in Africa?
I want to emphasize two aspects of this FDI. The first one is quantity, which helps the economy grow. But the second one is quality, which makes sure that the average African citizen actually benefits from this growth. And basically any developing economy, has to get help from organizations like the African Development Bank, the World Bank, the IFC, and of course, MIGA, because this means that you have to take big risks when you're bringing in FDI of this sort. And because this means locating a part of your production that is part of a larger global value chain in a poor country. So political stability starts to matter, infrastructure quality starts to matter, all of these things. And you have to get this mix right.
Thank you so much for your time today on the panel. Also, thank you to our audience. I'm Esther Awoni. I've been your host and your MC.